Now I am. Okay. So going back to the review sheet. And Gerald, this is under the final exam. There's a Word document that has I'll go ahead and share it actually. But it is under Moodle as well. All right. Now I think we're all on the same page. So as I said, one of the essays addresses is that first bullet item right there under your review sheet. Describe how the purchasing disbursement cycle is the mirror image of the sales and receipts cycle. And I just give a couple of examples of that. So on one end, really, you can summarize that by thinking of it as, on one hand, one person is always giving a document, the other is receiving it. So there's a back and forth there. Distinguish between a perpetual and periodic inventory system. You do have a couple of multiple choice questions about inventory in terms of purchasing. We'll talk briefly about inventory today when we go back to the purchase, that monstrosity, the two system understanding aids. You should be able to, you have lots of multiple choice questions about the purchasing cycle. You should know what each of these documents are: the purchase requisition, the purchase order, the receiving report, the invoice, the voucher package, and the disbursement voucher. What they are, what purpose they serve, what order those documents are created. All of those are topics that get covered in multiple choice questions. I guess some of the items that show up on those different documents. So like, what's an example of a field that goes on a purchase order? Yep, date, purchase order number. What else? Yep, the item, who you're buying it from, what quantity you're buying, things like that. So this next one, all of these items relate to the internal control part of the purchasing and cash disbursement cycle. So describe some of the control issues related to using checks to pay for purchases of inventory. That is an essay question. I believe, yeah, that's an essay question. The next one, describe how the use of RFID tags and barcodes can reduce inventory theft. That's another essay question. We've talked about that a couple of times. We talked about RFID and barcodes on the sales and requisition side, because you need to have the inventory on hand so you can sell it. We also talked about it on the purchasing and cash disbursement side, because it can be stolen in the purchasing process just as easily as it can be stolen in the selling process. Describe the risks associated with selecting an inferior supplier and the controls that might mitigate this risk. We've talked about those. So the supplier related risks are product quality that's inferior, product price that's too high, and product delivery that's too slow. So you'll have, I think, a couple of multiple choice questions on those control risks. describe the risks associated with inventory loss and the controls that might mitigate these risks. You have an essay question about that that can help guide your multiple choice completion, as well as some of these specific controls that we talked about in class. So matching the purchase order to the packing slip, how would that help? Let me ask y'all, how would matching a purchase order number to the packing slip help mitigate the risk of theft? What big thing is that helping to prevent? That one is helping, Melinda said, making sure you're shipping the right products to the right place. That first one deals with making sure that you are receiving items that your company actually ordered. Yeah. The next one, physically counting inventory, that gets more into the right count, the right items, and then providing a receiving slip without the purchasing quantity. We talked about that in class. What does that help prevent in terms of loss from theft? If there's no number, yeah. Yeah, so what Julian said is that, well, the person receiving doesn't know how many there are supposed to be there. It forces them to take a manual count and prove how many are there, which is a good control, because if otherwise they could be either blindly accepting materials that weren't ordered or accepting too many or too few. So the next broad category of questions you should be able to answer: identify the threats. I always use the phrase risk, but the textbook uses the phrase threats associated with approving invoices and the controls that can mitigate these risks. So one of the risks we talked about was payment to fictitious vendors. And what's I gave you a hint there, vendor approval system. What's a way that, what did we talk about that would help prevent payments to fictitious vendors? We talked about controls. Exactly. What Melinda said was, if you limit the access to that master supplier file, by limiting the access to that file, it prevents people from creating fictitious vendors and thereby prevents payments to fictitious vendors. What else did we talk about? There's another item we talked about that can help prevent payments to fictitious vendors. Kind of, that's more the next item, which is overall looking at the purchasing department. The other thing we talked about, and I think we talked about this on Monday, was the having vendors that are only used once, subject to additional managerial review. Because sometimes you only need a vendor once. Like, I don't anticipate, once I finally get the dirt in my raised flower beds in my house, I don't anticipate having to buy dirt and pay a dirt hauler again. So if I were a company, I would set that vendor up once and then immediately shut them off. But because I'm only using them once, you'd want someone looking it over to make sure that there's a valid business reason for that and that it's a valid supplier. Another risk we talked about was duplicated invoices coming in from your suppliers or paying them twice. Do you remember what controls we talked about there for the duplicated invoices? Anyways, that's on the, Melinda said invoice numbers, and that's on the supplier side. You use sequential numbers on the invoices to make sure that you're not skipping anybody, you're not double paying anybody, things like that. And we might not have talked about this. One of the controls that we did on the paper system understanding aid was having good old Ray sign off on he signed off on the employee pay cards to make sure that they didn't try any funny stuff. He signed off on the purchase order when it came in from the vendors. And he would do the same thing on the invoices once they're prepared for payment. He'd sign off on them as though to indicate that I've already paid this and I don't plan on paying it again, as well as not allowing for photocopied invoices, only paying from the original. That was the other control that I think it was on my PowerPoint slides. I don't remember if we talked about it. This final one, you have a couple multiple choice questions about segregations of duty in the purchasing department. Specifically, you should be able to, from those process flow diagrams in your reference book for this, as well as the PowerPoint slides, we talked about which function authorizes the purchases. Do you remember who that was? Which function of an organization? Yeah, so which function of an organization authorizes the purchase of goods or services? Yeah, exactly, the purchasing department. Exactly. Who records purchases? Which function of an organization is responsible for recording the purchases? You're close, that was the first word. Accounts. Close, warmer, yep. You're high, warmer, hot, yep. Accounts, yeah. No, because that would be academic fraud, and that's not good for any parties involved. But yeah, so the authorizing department is the purchasing department. The recording department is the accounts payable department. And then who has custody of the checks and or ability to pay? In our understanding aid, it was limited to one person. It was limited to, I think it was Ray who ultimately signed the checks. But the cashier's department is the one who has custody of the checks and or the ability to pay. And we talked about how a good control is only having one person have keys to wherever they lock up the blank checks. Only one person have a login and password to the system that they use to authorize electronic fund transfers, things like that. All right, so that was the first chunk of the exam, I guess the first two chunks. The second two chunks deal with preparing the financial statements. So you should be able to explain the process for updating the general ledger. We started that on Wednesday when we were taking the totals from the subsidiary journals, like the payroll journal, the cash receipts journal, the cash disbursements journal, and transferring them to the general ledger. We started with some of the adjusting entries. And to know about adjusting entries, you have to know the difference between a temporary account and a permanent account. Do y'all recall which accounts are temporary broadly? Yeah, expenses is one category. Revenue is the other category of temporary accounts, exactly. And the permanent is everything else. the balance sheet accounts. What's the trial balance? Yep, it's basically a subtotal of the balance of each of the accounts in our general ledger. We prepare it actually a couple of times during the accounting process. We prepare it in the manual aid once we've transferred all of the transactions from the subsidiary journals to the general ledger and the general journal to the general ledger. And then we'll do it again when we post all of our closing entries. And then we'll do it a third time when we've closed out all of those temporary accounts at the very end of the period. And then a general ledger control listing, what does that sound like? I don't know if we talked about that, but it showed up in the test bank, so it's in here somewhere. So the general ledger control listing is similar to the trial balance. It's a numerically ordered listing of the general ledger accounts. The important thing there is that it's numerically listed. Why is it numerically listed? Because that's how we set up our chart of accounts. It's really not different from the chart of accounts. Yeah. If anything, this takes into control some balances as well, but it takes into consideration the transactions, whereas the chart of accounts is just a listing. So you would use the, yes, it has the balances. Yeah. Let's see, we talked about the different categories of adjusting entries. Know the difference between an accrual entry, a deferral entry, a correcting entry, a closing entry, and an estimate entry. We talked about those on Monday in that PowerPoint presentation. And we also talked about these types of entries at the very beginning of the semester when we first were going through the flow of accounting transactions. So a deferral, let's see, I'll pose that question to your classmates. What's a deferral category of adjusting entries? What would y'all guess? Which one? No, bad debt fell under the estimate entry because at the beginning of the period, you're taking your guess at what, let's just go through all 5 of them. So the estimate entry, we talked about those. The 2 broad categories of estimate entries were the bad debt expense, because you're making a hypothesis of what you think you're going to have to write off by the end of the year because your credit customers weren't able to pay their invoices. The other category of estimate entry is the depreciation entry. The reason why that's an estimate is because you don't exactly know, ooh, blue skies, I forgot what those look like. It's the other reason that depreciation is an estimate is because you don't know exactly how long a life you're going to get out of that asset. Like you might plan on driving a corporate vehicle for 100,000 miles, but you might have bought a lemon and have to ditch the car at 40,000 miles. So it's really an estimate. A closing entry those are at the end of the period where you're taking a revenue account or an expense account back to 0, so you can start the next period over again. A correcting entry is when you detect an error that you made and have to fix it. An accrual entry, that's where you're having to make a placeholder for an expense you know you'll have to pay but haven't made the cash payment yet, or money you expect to receive but haven't received the payment yet. So and then finally the deferral entry, which was what Julian's question was, that's where you've already received the cash or already paid the cash, but you haven't received the benefits from purchasing something. So like if you paid your car insurance for 6 months at a time, if you were a business, you would check off 6 months of expense or 1 month of expense every month when you were preparing your monthly income statement. Yeah, prepaid rent is another example of a deferral entry. Prepaid revenue is a liability, and that's the other example of a deferral entry. So good questions, y'all. Bank statement, describe why you prepare one and why do you prepare a bank reconciliation. I don't know if we talked about that yet. I was going to talk about it in conjunction with showing you how to run the bank rec in QuickBooks. But what would you guess? Why would you use a bank reconciliation? Yep, to make sure that your books, so your cash balance per the bank and your cash balance per the general ledger, that you can at least figure out why they're different. So often you'll have checks outstanding that you've written, so they don't show up on your general ledger, but they do still, that money for those checks still shows up in your bank statement. You might also have deposits that you've received and therefore show up in your general ledger but haven't been taken to the bank yet, or the bank hasn't credited it to your account. And then, yeah, they sure are slow, especially auto deposit stuff. The bank sure is slow at letting me have my own money back. So that's what that means. And then use these two primary figures to reconcile one to the other. And then this, order the creation of the 4 financial statements. You did see this was, we had this question on the very first exam. It's, you have to prepare the 4 financial statements in a specific order. So that way the net income from your income statement can be used to calculate your retained earnings, so that your retained earnings can be input in your balance sheet. And then last but by no means least, you prepare the statement of cash flows. So you'll probably see that, hint, hint, the exact same way you saw it on your first examination. So you'll get the drop-down menu where you say, oh, this one comes first, this one comes second, this one comes third, and this one comes fourth. Finally, the controls associated with the production of financial statements. You should be able to describe at least 3 threats related to the general ledger and reporting cycle. That sounds like it could be an essay question. Could be. Identify internal controls that could be used to mitigate the threats related to the preparation of the general ledger and the financial statements. That also sounds like it could be an essay. Just if I were to take a guess. And so do you recall some of the threats related to the general ledger and reporting cycle? We talked about that on Monday. What are some some threats. Yep, unauthorized. Yep, so the wrong people making an entry to the system, the wrong amount being adjusted or included in the statements. And both of those could be created or mitigated by these items here. Data entry validation controls is the broad category for them. And then specific types of data entry validation controls are the validity check, the field check, and the zero balance check. I'll show you some of these if we have time. I can show you some of these in QuickBooks, but if you were to take a guess, what does a zero balance check sound like? I've gotten this error a couple of times when I was practicing QuickBooks in preparation for lecture. Zero balance checks. So every transaction should have at least one debit and at least one credit, and debits need to equal credits, right? So a zero balance check, if you try to, for example, on some of the purchasing transactions in QuickBooks, if you forget to, one of the ones where I saw it was where you had to enter sales tax on QuickBooks, and you'll get an error from QuickBooks that says, hey, the debits don't equal the credits. They should have a zero balance. They should net each other out. That's what's called a zero balance check, if the debits don't equal the credits. A field check, what Melinda was kind of describing is like, well, there's no account with that number, or that you've entered a credit balance for an account that should have a debit balance. That's called a validity check. And for an example of that would be if you try to enter transactions or enter adjustments into a chart of accounts number that doesn't exist, you would get in QuickBooks an error that says, hey, I don't see an account that matches with what you're trying to do. And that's a good way to make sure that no one is hiding money in the wrong or non-existent account string. And then the third general type of data entry validation would be a field check. And that's where I've made those errors in QuickBooks a lot when I was practicing. I probably made some of those errors when we were doing it together in class. So that's like if you try to enter a dollar amount in a date field, if you try to enter an alphabetic character into a numeric field. It's a field check because you're not entering the right kind of data for that data entry field. So those are some of the internal control threats, or the internal controls that can be used to mitigate the threat of false or fraudulent reporting into the general ledger or the creation of financial statement reports. What else? What's another? The big three threats are wrong amount, wrong person, and I forget what are you really looking at it? You're looking at it from the whole cycle, so general ledger and reporting. So you talk about wrong amount into the general ledger, wrong amount posted into the financial statement, wrong person doing the job on the general ledger, wrong person entering the reporting cycle. We talked about some of those data entry controls. The other data entry controls that we've talked about throughout the semester are also true, only letting certain people make those entries. only requiring those entries to be reviewed by someone in the organization is another control. And that one we talked about, I mean, really the holistic system of internal controls, all build up to accurate reporting of the financial statements and reporting of financial statements that are materially free from fraud. So that was the slide on the bullet on my presentation that said really all of the controls. So I wouldn't deduct points if you said all of the controls, but I would like to see specific examples too. Another one that we talked about in conjunction with the general ledger process and the reporting process is the financial statement audit, which that's a class for those of you who are accounting majors. You'll take that likely your senior year. I think it's offered in the fall semester. And that's where if the receiving and the purchasing processes are mirrors of one another, auditing is almost a mirror of accounting systems, because here you're learning how to build a system that's got sufficient controls to prevent error and fraud. In the audit side, it's a mirror image. You're looking at those controls to make sure that they're generally free from error and fraud. So the financial statement audit is the other broad control that's used to mitigate these risks here. We talked about this on Monday with the vouching and tracing. I should put that there. You'll have to write it in, but vouching is where you start from the top, looking at the account balance as a whole and following the transactions back down to their supporting documents. Tracing is where you start from the supporting documents and work your way up to the account or the general ledger. And how do those help promote those are used to promote an auditor. So vouching and tracing is used to promote financial reporting that is materially free from error and fraud. Really all of the controls we've talked about throughout these 15-ish weeks together, all of the controls are intended to limit the risk of error and fraud on your financial reporting. But these specifically, they allow you to make sure that this is existent. So vouching makes sure that the individual transactions exist. Tracing makes sure that the account balance is relatively complete. And that's another example that you could use in, I think this might actually be an essay question too. This sounds a lot like an essay question. Describe how. You could also use this response to answer this subpart of an essay question about the controls. So now I've spent 43 of your 50 minutes talking through the exam on Monday. Let me point out two things to you. This class. I did a portion of your grade, I believe 20% comes from these daily activities and quizzes. This is a one-question quiz. There's no wrong answer. It'll go towards your in-class activities and participation. I can. So I tried to make it, oh my goodness. Hide. tried to make it a fun question. Help me decide what breed my dog is. With the commentary that if you like responding to questions that have no wrong answer and you want to help contribute to better decision making, make sure to complete your course evaluations. As of this morning, 5 out of the class have completed it. If at least 10 of you complete your course evaluations, I'll give everybody in the class 10 bonus points. And remember, I grade this class, or I post final grades in the class based on how many overall points you earned. And anything more than 795, between 795 and 894 is a B. Between 895 points and 1,000, or anything more than 895 points is an A. So every little bit does add up. Ask a person who lives in New Mexico during election years. It adds up. And I guess I'll use the last 5 minutes of class to, wait, let me say, so that was announcement number 1. Announcement number 2, both your system, your printout, for the written one that's been a beast to complete. So the written one to May 7th, if you get it to me early, I'll give you 10 bonus points. If it's late, if I have to chase after you to try to find this thing, I'm deducting 20 points. Same with your QuickBooks, they're due on May 7th. If you get them to me before May 7th, it's 10 bonus points. If it's late, it's a 20-point deduction. I'm available next week if you get stuck while you're finishing both of those projects. I will be here. I'll be on and off campus. So just send me an email and say, hey, what hours will you be on campus Wednesday? I'd like to ask you some questions about the systems understanding aid, and I'll be happy to come. If I'm here, you're welcome to just pop your head into my office, which is right over there. It's 213. Or I'd be happy to come to campus at a mutually agreeable time. So I think that's, and we have 3 more minutes. Can I answer any quick questions about either of your 2 outstanding projects? Yeah, what I plan to do, my copy of this is substantially complete. I'll have this, if you want to take a look at my completed version, I'll have it in the little ante room in my office. So after you finish your exam, if you want to compare what you've done in this one in yours to this, there's that option. You can also leave a draft with me on Monday after you take the final exam, and I'll complete this, the grading rubric in pencil, and tell you what your grade would be based on what I saw. And then you can use that information to decide, yeah, I'm good with that, or I guess I should put some more work into it. And QuickBooks, just print them as a PDF and upload them to Moodle. I'll create an upload link for that. Yes, it's for transaction set A, which is what we worked in class. Yeah. Which one is that? Let me open that and double. A was the blue document, and A is what we were working in. In QuickBooks. Okay, yeah, this is These look like pre-close numbers for transaction set A. Was that your question? Okay. Yeah. So this was one of the, I remember that transaction. We did this on Wednesday, transferring the sales journal credit to the general ledger. So I know that's the right number there. I think we transferred that one as well. So any other questions? Like I said, I'm here next week if you get stuck, but I won't necessarily be there. So just give me a shout out if you get stuck, want my help. I'm here to help you. And best of luck on Monday. Oh wait, let me double check that before we dismiss. I think it is. Oh, that doesn't mean that's actually when that's when I set it up. Let me double make sure that. If this is the right final exam schedule. Yeah, so Monday, May 3rd, 10:30 a.m. to 12:30 p.m. It has all 10 a.m. Monday, Wednesday, Friday classes scheduled. You may have the whole 2 hours if you need it. I don't think you will, but you have it if you want it. No, I have things to do. But yeah, so we are on for 10:30. It's 5 essays and I told you exactly what they are. You're fine. I said no, some of them are multiple parts. There's only, yeah. All right. Any questions from y'all before I log off? Miles, Chance, Gerald? Hearing none.
I have a question, Ms. Kim.
Okay.
This is Gerald. I was just trying to see, like, I was trying to basically just pay you because I could order the book.
That sounds wrong. Yeah, I'll go back and reply to your email. Yeah. Well, yeah, it's been a crazy week. So yeah, thank you for your consideration. I really appreciate that.
Yes, ma'am.
All right. So I'm gonna close this puppy. See y'all Monday.